Imagine buying a car for $10,000, only to find out you're paying an additional $2,000 in hidden fees. Frustrating, isn't it? Well, welcome to the world of investing. You see, when you decide to invest your hard-earned money, you're essentially buying a financial vehicle that will carry your wealth into the future. But just like with that car purchase, there are costs involved, and not all of them are presented up front. Let's call these costs investment fees. They're like those pesky extra charges that you didn't anticipate when you bought your car. Only in the world of investing, these fees are often far less transparent. They're hidden in the fine print, lurking in the shadows, quietly nibbling away at your potential returns. Now, you might be thinking, a few fees here and there can't make that much of a difference, right? But here's the kicker. Over time, these fees can add up to a significant sum. Imagine if every year you had to pay an extra $200 on your car. Doesn't sound like a lot, right? But over 10 years, that's $2,000. And just like with our car, these investment fees can spiral out of control if we're not careful. Without even realizing it, you could end up losing a huge chunk of your investment to fees alone. Kind of puts a damper on the whole idea of growing your wealth, doesn't it? But here's the good news. You're not powerless in this situation. With a little bit of knowledge and vigilance, you can navigate the labyrinth of investment fees and ensure that the majority of your money is working for you, not for somebody else. So how can you avoid this financial pitfall? Let's dive into the various types of investment fees. In the investing world, the price tag isn't always clear. There are several types of fees you might encounter. Let's begin with management fees. These are the costs charged by investment companies for the professional management of your money. Think of it as a fee for the ongoing service they provide. It's like paying a gardener to tend to your plants while you're away. They water, prune, and nurture your plants, ensuring they grow healthily in your absence. Similarly, management fees cover the cost of having experts nurture and grow your investments. Next, we have expense ratios. This is a percentage of your investment that goes towards various operational costs. Imagine you're at a restaurant. The price of your meal doesn't just cover the cost of the ingredients, but also the cost of running the restaurant. Electricity, cleaning, staff salaries, and so on. In the same vein, the expense ratio covers costs such as administrative expenses, legal fees, and other operational costs involved in managing an investment fund. Last but not least, there are transaction fees. These are charges incurred whenever you buy or sell investments. Picture this. You're at an auction, bidding on a beautiful antique. When you win the bid, you don't just pay for the antique itself. There's also an auctioneer's fee. Similarly, when you buy or sell an investment, there's a fee involved. That's the transaction fee. So, management fees, expense ratios, and transaction fees, these are the common types of fees you'll encounter in the investing world. They might not seem like much at first glance, but over time, they can add up. It's like having a small leak in your water pipe. You might not notice it at first, but over time, it can lead to a significant amount of water and money wasted. Understanding these fees can make a significant difference in your investment returns. But how exactly do they impact your investments? Ever heard of the saying, look after the pennies and the pounds will look after themselves? This is especially true when it comes to investment fees. You see, even small fees can have a big impact on your investment returns over time. Imagine a snowball rolling down a hill. It starts off small, but as it rolls further, it gathers more snow and grows larger. The same can be said about investment fees. They might seem insignificant at first, but over time, they accumulate and can significantly reduce your overall returns. Consider this. If you have an investment that grows at a rate of 7% annually, but you're paying 2% in fees, your net return is only 5%. Over 20, 30, or even 40 years, those 2% in fees can equate to a substantial amount. So, with these fees potentially eating into your profits, how can you ensure you're getting the best deal? Scene script. Shopping around for the best deal isn't just for your groceries, it applies to your investments too. When it comes to investments, fees are often the invisible hand that can either make or break your financial goals. So how do you compare fees when choosing your investments? Well, it's simpler than you might think. Start by checking the expense ratio. This is the percentage of your investment that goes towards managing the fund each year. For instance, an expense ratio of 1% means that for every £100 you invest, you'll pay £1 in fees annually. Next, look at the transaction fees. These are the costs incurred every time you buy or sell a stock or a bond. Some funds may have high transaction fees which can eat into your returns, especially if you're an active trader. Now you might be asking, how can I reduce these fees? Well, one of the most effective strategies is to invest in low-cost index funds or exchange-traded funds, ETFs. These funds aim to mimic the performance of a particular market index, such as the FTSE 100 or the S&P 500, and they typically have lower fees compared to actively managed funds. Why? Because index funds and ETFs are passively managed. They simply follow the index they're tracking without the need for a fund manager to constantly buy and sell stocks, which can rack up transaction fees. Another way to reduce fees is to be mindful of how often you're trading. Every time you buy or sell a stock or a bond, you're likely to incur a transaction fee. So by reducing the number of trades you make, you can significantly lower your fees. Finally, consider using a discount broker that charges lower fees. Just make sure to do your due diligence and ensure they're reputable and regulated by the Financial Conduct Authority. Remember, while fees may seem small, over time, they can significantly impact your overall returns. So it's crucial to compare and reduce fees where possible. Remember, every penny you save on fees is a penny that can be invested towards your future. Investing isn't just about making money, it's also about keeping as much of that money as possible. We've unveiled the hidden costs of investing, deconstructed the fees, and shared strategies to reduce them. You now have the tools to make informed decisions. If you found this content informative, give it a thumbs up and subscribe to the channel. Your support fuels our mission to deliver top-notch financial content. Feel free to drop any questions or experiences in the comments. Remember, in the world of investing, knowledge truly is power. So, keep learning, stay informed, and let your money work for you.